This week is our first in a two-part series on the 6 P's that impact the health of the reverse mortgage industry. Welcome back to the Industry Leader Update. This week is our first in a two-part series on the 6 P's that impact the health of the reverse mortgage industry. And our special guest this week, and also in our second segment, is Dan Hultquist with Understanding Reverse. Dan, thank you so much for joining us. You know, when you and I had talked a little bit about just how things are going in the reverse mortgage industry, there's a lot changing. I'm not going to get into that now because you'll be covering that, but tell us about the 6 P's, just first of all, what they are, and then we'll dive into each one briefly.
Sure. You know, a lot of stock is put on the endorsement figures, and, we saw the corrected figures come back at, a little over 64,000. I'm not sure that that's really a good metric to determine the health of the industry. So I had come up with 4 initially, and now I've expanded it to 6. That would be product mix, number 1. Principal limits or principal limit factors, number 2. Number 3 would be premiums or pricing, which we probably won't talk about too much today. Public perception would be number 4. Policy guidelines, that would be number 5. And then lastly, property values. It just so happens they all start with a P, which makes it nice and neat.
We love mnemonics. So Dan, tell us what's the important factors and the facets of the product mix?
Right. Since 2018, I've really been less concerned about the endorsement figures and more concerned with, well, what do the endorsed loans look like? Are they HECM to HECM refinance? Are they purchase? Are they proprietary? Are they traditional HECMs? And, we've been seeing this for a while of those companies who put all their stock in, let's go ahead and churn some business, haven't really fared too well over the summer and into the fall. It's not healthy for the business. It's not a sustainable business model. And so there are some of us that have been saying that for a while, a warning, hey, rates are going to go up. And when they do go up, you need to have a sustainable business model out there to continue doing business. We did see a surge in proprietary business, over the last few years, but those products don't have the same protections like non-borrowing spouse and principal limit protection locks. So they're vulnerable to rate changes, right? So that's going to impact the way the loan is structured. And then we really have not been successful recently at bringing new business in outside of maybe a few lenders. I'm talking about purchase volume primarily, and I know it's hard, but there are some companies out there that are doing quite well. Fairway is one of them. Mutual of Omaha is another. They're making it work because they're putting a lot of emphasis on let's work with realtors. Let's make sure everybody understands how powerful this program can be to allow our senior homeowners to relocate. If it weren't for just a handful of companies that have done well with the purchase product would be nearly extinct. And we probably need to focus a little more on that.
So HECM HECM to HECM refinances, as we know, just like the traditional mortgage refinance, has pretty much gone down to a trickle. So we have the HECM for purchase, which you say is getting a little more traction, but just with a handful of lending institutions. Now, proprietary, interest rates are a big impact on all of our products, whether it's the federally insured reverse mortgage or proprietary, but falling home values, Dan, is one of the things I'm looking at. That probably is going to have an impact on the proprietary market as well, wouldn't you say?
Right. And it's a limited market. You're talking about a lot of California business, or there's some pockets where the proprietary might do well. But again, it's just limited areas where that's going to work for you.
How about principal limits, your second P? So we've had them changed, what was it, October 2017, is that right?
Yeah. So the principal limit factors have been around for quite a while, but the application of them has changed quite a bit. Just to give you an example, in my notes here, I'm showing January 1st of this year, the 10-year CMT average was 1.51. Okay, that's long in the rearview mirror at this point. We're sitting at 3.83 as a weekly average right now. And so you add a 2.5 margin on top of that, and your expected rate is 6.33%. Well, as we all know, as expected rates rise, your principal limits drop. And so less people are going to be able to qualify based on new principal limits and principal limit factors. Now, we've had some offsetting advantages in that property values have increased. So as property values went up, yes, we saw a loss in PLF, but it was offset to some degree. But we don't know how long that's going to last.
So we're not going to see probably any changes in the principal limit factor. So I'm going to move on to the next one. Premiums and pricing. Have you heard of any recent developments in the secondary markets which determine that?
No, and we probably don't want to spend too much time on pricing because that's really a lender issue. But HECM loans aren't as valuable in the secondary market as they once were because the prepay speeds are too fast. And so with all the refinancing activity over the last few years, I can understand why the premiums are maybe a little bit less than what we've expected in the past. And we're talking about expected refinancing too. If we see a spike in expected rates and then we see a cool off over the next year or two, we'll be expecting to, turn around and refinance some of that business. So I can see why the premiums have dropped.
Absolutely. Well, Dan, thank you. We're going to have you back next week for the second segment of the 6 Ps that impact the health of the reverse mortgage industry. Folks, for each of you watching, please share this video on your LinkedIn profile, especially Facebook and other social media platforms. And don't forget, you can subscribe to our YouTube channel, The HECM World, and also hit the notification bell. That way you never miss an upcoming episode. And each and every week, you can catch your reverse mortgage news on the go. It could be on a drive, you could be in the gym or hiking, and learn what are the most important reverse mortgage stories each week as you're walking around. So be sure to listen to HECM World Weekly. Apple users can subscribe and listen on iTunes. That's it for us this week, and be sure to return next for part 2 of our interview with Dan Hultquist. Happy originating.